I'm Walt Molony. I work in media relations with the National Association of Realtors. Since 1981, I write the association's statistical news releases and also work as a spokesman. Data is collected directly from multiple listing services. It's a pretty big sample for existing home sales, about 40%. And we adjust this seasonally. The government requires all major indicators to seasonally adjust so we can see where the market is relatively speaking, what direction it's moving in. We compare it to the previous month as well as a year ago. Leading indicators are forward-looking. They tell us what's going to be happening. The most important probably is the pending home sales index. It's based on a 20% sample, and it's pretty indicative of sales that are going to close in the following 2 months. In contrast to existing home sales, that's a lagging indicator, series of record. It's based on actual closed transactions. Other leading indicators are housing starts and new home sales. They're from the Census Bureau. New home sales is pretty volatile. It's only about a 2% sample, so they tell us it takes 4 months to establish a trend. Kind of takes away some of the edge as a leading indicator. Housing starts, also a good leading indicator in terms of builder sentiment. Takes several months to establish a trend. Part of that series is building permits, and that is even more forward-looking as to what builder optimism is going down the pike. First-time buyers are really key to the market. They've been driving it, almost half of all home sales in the past year. And that's good because that gives sellers an opportunity to sell their home and make a trade. Over the past year, we've had a lot of foreclosures and short sales, so it's taken a little bit longer to see the trade-up benefit, which is occurring in the middle of 2010. So this recovery is actually lagging recoveries that we've seen in the early 80s and the early 90s. The seasonal adjustment is made to the data. You do a sampling, you look at what's representative on a census region basis, and you project that into total numbers. We seasonally adjust it to see where the pace of activity is, where it is relatively speaking. What a sales rate means, if we say that last month there was an annual pace of 5.6 million sales, that's how many sales would take place in a year if the pace of activity were held up for 12 months. Government likes us to adjust those numbers seasonally so we can see the current direction of the market, because sales are normally rising in the spring and dropping in the fall, and without that context, it's not very meaningful. If you're looking at seasonally adjusted sales for the South, for example, if you're in Florida, that's going to be a little bit more tailored to you. There are a lot of data resources available on the web. If I was just to mention two, it'd be Realtor.org and Census. At Realtor.org, if you go to the research area and click on housing statistics, you can find the data on existing home sales, pending home sales, the housing affordability index, metropolitan area home prices, state sales. So that's a pretty rich site. If you go to the census.gov site, click on housing, you can find housing construction, you can find new home sales, you can find home ownership rates, housing stock, housing vacancies. It's kind of a maze, so you need to kind of familiarize yourself with it, but both are very rich sites. If you look at home price comparisons, we have a lot of price indicators today, very confusing. The government's indicator, FHFA, is based on repeat sales. That's a little bit more optimistic. Case-Shiller includes foreclosures and jumbos, so it's only 20 markets, a little bit more pessimistic. Our median home price data from National Association of Realtors is kind of somewhere in the middle, but all those price indicators have been converging around a flat line, and that's beginning to show a broad stabilization occurring in home prices. Existing home sales, pending home sales, metropolitan home prices, state home sales, housing affordability index. We also have data on vacation investment homes. We have data on the commercial market. Those are in a little bit different area of the website, but we can look at one major area where you can find a lot of those. The Freddie Mac site is the best site out there if you want to know what historic mortgage interest rates are. It's the longest running series. dating back to 1970, and they report the average commitment rate for a 30-year fixed rate and the cost of points. And that's really the most important mortgage interest rate site out there.